Hey guys, welcome back to the channel. Today I will share with you GBP yen and USD yen from a multi-time frame perspective. So let's begin. The first one is GBP yen. We have seen this analysis also before. When I updated this analysis, the price was moving in this area here. This was the zone where the price was developing. And we were expecting for the Bank of Japan interest rate decision. As I explained also before, for the bearish movement that everyone was expected, it was required from the Bank of Japan to increase the interest rates again, or probably they should have created any intervention in the market related to the currency rate. The focus for the currency rate is not related to all the yen pairs, is related only with USD yen. And as you can see, considering that the Bank of Japan didn't increase the interest rates, I explained this also before, the chances for a bearish movement decreased and the price moved up in a crazy way. So look at this big bullish movement. After it stopped everything, we can see price moving down. This was also related to the comment that the Bank of Japan was not going to increase the interest rates, was not going to change the monetary policy statement. And what was the most important part was the fact that they said that the exchange rate is not affecting the inflation. So this is something very strange posted from their side, very strange comment. After that day, the price increased in 2 days 800 pips, and so far we can see that the price is still back in the zone where it was before. This movement that we can see in the chart is a type of ABC movement. It is not clear if we are going to be in a corrective wave and the price may rise again, or probably we can be in a type of different wave. We can see the price probably to come close to this area here, close to this zone, 195. That corresponds also to a structure zone on the left. It can happen that the price can also rise up to this area before it moves down again. The problem that the price increases because the market saw very clearly that the Bank of Japan was not doing anything for the moment, and this was the time for the bullish run. These two bearish waves that we may see at this moment, these are created from the Bank of Japan intervention in the currency market. But what is very strange is that they didn't accept that they created this in market intervention related to the rates. So this is something very strange again. But considering that the price already stopped, the move down is also related to the profit-taking moment, and it is not only related to their intervention. So this is 800 pips. In the same way as it moved up, it moved down. But if they are not going to intervene again and to decrease the quantity of the yen in the market, then we should see price rising further. If they are going to intervene, then the chances will be that we are in a type of 5-wave pattern, and probably we can see the beginning of a bearish wave. However, considering that the yen pairs are not related too much to the technical perspective, but they are related more with the fundamental perspective, we must be very careful when trading. On a daily chart, it looks very well. And look at how far we are from this area where the price was during the previous intervention. So during the previous intervention at this point, in the end of November, the price moved down nearly 1,000 pips. Yes, it was 1,000 pips. And from bottom to top, we are 2,150 pips. So in order to have a minimum balance, I think that the price should come close to 1.88. So this is the area where we should expect the price moving down. However, let's see, because it is required the Bank of Japan to intervene. Otherwise, we may see GBP yen rising in this area again. So from this zone where the price is right now, we may see the price rising up to the structure zone that we are looking at for the moment. So it is all about the market intervention from the Bank of Japan rather than the technical analysis time. However, this is the minimum balance that I'm looking at. If the price will move down, you can take this, you can look at this as a target zone if the price will move down here. And if the Bank of Japan will increase also the interest rates during the coming meetings, but I think that that is not going to happen anytime soon, it will be the only reason for the price to move down if they increase the interest rates. But I don't think it will happen. So let's hope that they will intervene in the market and to decrease the quantity of the yen. So this is what I'm expecting so far. So let's see. This is the technical part, but from a fundamental perspective, we can never know what the Bank of Japan can do so far. And this can also be another big area where the price may rise every time that it moves down. So it can be another zone where we can see this type of bigger moves like this here, for example. I wouldn't be surprised if we can see the same things. However, we are going to discuss the yen pairs also later. So far, let's see how the price will react up to this point. And the next one that I'm going to share with you is also USD yen. The price increased up to 160.20, and if we are going to look back on the left side of the structure, we have a very old area. This is a weekly zone, and this is dating back in April 190. So look at this zone here. We are nearly 35 years ago. The price moved down in a crazy way when this zone was tested. It was related also with the intervention from the Bank of Japan, despite the fact that they still don't accept that they made their move. USD yen so far moved down from the top nearly 800 pips, and this is not too much compared to the other yen pairs. So we can see a big imbalance between them. If we are going to look at GBP yen, this is back in the zone where it was before the Bank of Japan meeting during the previous week. But if we are going to look at USD yen, this is above the structure zone where they said that we are going to intervene. So we are again in a critical moment. Probably the Bank of Japan will be happy that they push the price down up to this moment, up to this zone. It can be possible that this is only a support zone now and the price may rise further again. However, considering that we have also the non-farm payrolls data today, and we already had the FOMC meeting, it is also we have to take also in consideration that we may see the bearish wave happening, but it will be related to the USD rather than the yen pairs. On this daily chart exists also the possibility for this type of pattern, a type of ascending broadening wedge pattern. The price can break down from this area here, and in this way it may confirm a bearish wave, and probably some support from the Bank of Japan can tend to push the price down again from this area, with the first and the strongest support near to 146 and later 141. So these are the two areas where the price may find strong support, and you can use also as a taking profit zones. But we have to see how the price will develop during these days. On the other hand, for the opposite scenario, it can happen also the possibility that the price may rise again in order to expand the pattern, but it can develop something like a WXY XZ scenario with a possible double top, and it is possible that from this area we may see the price to begin the bearish wave. However, let's see, these are the two possible scenarios that I'm looking at for the moment, but I don't believe too much to the Bank of Japan because they are not reliable at all. So that's all for today. I hope you guys enjoyed the analysis. Thanks for watching. Please don't forget to hit the like button and follow. Bye bye.